What's good, everybody? Hopefully you guys are doing good. So we are back today for another video. I know it's been a while. I know, relax, trust me. I'm back. I had to take care of a few adult things. It happens from time to time, but I am back. Feels good to be back. I'm glad to make a video for you guys. Now before we begin, this is my Twitter page in case you guys are not aware. Feel free to follow. You just click and you can follow. It's pretty easy. I post regularly on Twitter. It's a lot easier for me to post some thoughts than to make a video that's 20 minutes long to edit and post and all that good stuff. So if you have any questions, comments, anything that's stock or finance related or anything else, go ahead and send me a message via Twitter. That's the best way to do it. Right now I'm at 391 followers. Hopefully by the end of the weekend we can hit over 400. Usually I put a message when I'm close to hitting a benchmark. However, from past experience, every time I put that I'm about to hit a benchmark, somebody trolls and they just take the subscriber count down in the wrong direction. So we're not going to do that today. I'm not going to put a tweet about it. But if you would kindly follow, I would much appreciate it. Alright, let's continue. Alright guys, so as you know, it was a rough couple days on Thursday and Friday. And I was tweeting about it even though I didn't make a video. I was watching the markets. My portfolio was down. I'm pretty sure most people's portfolio was down, but nothing too crazy. The Dow ends more than 800 points lower as tech plunge gives stocks worst day since June. Yeah, the tech industry, that's what got hit really hard on Thursday and Friday. Interestingly enough, Apple had the split stock situation that they did. I'm going to probably make a video on that at some point, hopefully, what a split stock is, why they do it, all that good stuff. Apple sees biggest one-day fall since March, so that's pretty insane. Now let's continue on here, see exactly what happened and try to get a better understanding and gauge to see if we're going to have more down days in the upcoming weeks, which, just a prediction, I think we are. The election is right around the corner. We're going to have either the same president or a new president in a couple of months be elected, and it's going to be a crazy ride until we get there. Now the fall came a day after the S&P 500 claimed its 22nd record close of the year, while the tech-heavy Nasdaq Composite arrived at its 43rd such all-time high. The Dow topped 29,000 for the first time since February, which is absolutely insane. Thursday's fall snapped a 4-day win streak for the Nasdaq and a 10-day run of gains for the S&P 500 tech sector. Yeah, tech is out of control. Apple, Facebook, Google, CRM is Salesforce, Semiconductor, Michael Co something, and I don't know what the rest of these are. But anyways, Google, Facebook, Apple, those are the big ones for tech. Quick disclaimer, I do own Apple stock. I do not own Google or, what was the other one I mentioned, Facebook. They just don't fit my strategy. I like companies that pay dividends and increase dividends over time. And Apple fits the criteria, even though their dividend payout is really low right now. They have a lot of money on hand. I mean, they're worth trillions of dollars. They're going to raise it over time, and I feel comfortable with Apple. That just fits my strategy. Do your own research before you make any decisions. Alright, so this is what everyone's wondering. What the heck happened? What drove the market? In the absence of a specific catalyst, it's easy to classify today's swoon as profit-taking. So Chris Zaccarelli, the Chief Investment Officer for Independent Advisor Alliance, noted the most loved parts of the stock market, the tech, consumer, and communication sectors sold off the most. So people might be thinking, hey, because of elections coming up, because everything's going up, the markets are very high right now, it's best to sell out. And that's kind of what ended up happening, and that's partly why we have all these drops that we do have. Now, quick note, I have not sold anything. I don't buy to sell, I buy to hopefully hold long term. There are a few exceptions to that. I will get a video for that later. I did kind of talk about it a little bit in past videos, but yeah, I don't like to buy and sell. I know some people day trade and they do all that. That's just not my strategy. It's too risky. I'm not doing that stuff. So I'll make a video about when I sell. Alright, let's continue on here. Tech stock and the overall market hadn't really had a bad day since June, so this is healthy breather. It was never just going to be a straight line, but the long-term structural support for tech has not changed and support for equities has not either. Yeah, tech is not going anywhere, even though we have minor drops here and there. I mean, tech is going to be going up. S&P 500 index tech sector fell almost 6%, while communications and consumer discretionary each dropped more than 3%. The energy sector, in contrast, fell just 0.7%, while financials declined 1.6%. Now, I really have a lot of companies that are in the consumer discretionary and the communication as well. And yeah, I did notice a hit, but because I was well diversified, it was not too much of a hit, and I'm still okay. I'll be fine. And it's going to go up in the long term. Another prediction. Now, something else was interesting as well. New applications for unemployment benefit in the latest weekly period ending in August 29th fell 130,000 to a seasonally adjusted 881,000, or lower than the consensus estimate of 940,000. So that's where we're at with our unemployment. In other data, a revised reading of the U.S. second quarter productivity rose 10%, while trade deficit widened to 63.3%. U.S. likely to add 1.2 million jobs in August, economists say, but hiring has slowed. I do have an article here where I will go over that. Which stocks are in focus? Apple, they fell 8%. Facebook dropped 3.8%. Google, and everything else that I kind of went over previously. How are the other markets trading? The 10-year Treasury note yield fell 2.9 basis points, and the dollar index, which tracks the performance of greenback against its major rival, fell 0.1%. So not a whole lot. So there you have it. That's part of what had happened here, and I got a few articles just so we can get different perspectives and make sure that we have a lot of information before we make decisions on what we're going to do. Tech stock and the rest of the market are both very expensive for two completely different reasons. Yeah, tech is very expensive. Apple, very expensive. Facebook, Google, they're trading I think close to all-time highs. Now let's see what we got here. Everyone talks about the breathtaking run-up in share prices and, of course, the valuations of a select handful of high-profile U.S. companies. Yeah, as you guys can see, Facebook, Microsoft, Netflix, Google, they're all in the red. And this chart here, select metrics for S&P 500 versus FanMag, which is these high tech companies here. They're all kind of classified. Versus this was at the pre-bug level versus August 31st. As you can see, the numbers have changed pretty dramatically here. All right, let's continue on here. What else we got here? Let's see. Investors should be asking themselves one important question. He asked, are the earnings of FanMag much more likely to beat the raised expectations, up 10% since February, than the slash earning expectation of the index, down 16%, the sharp sell-off? All right, let's continue on here, see what else we got going on. All right, so this is tradingview.com. This is a good site that I like to use. It's a good tool to help you get information. Now, what I like here, market movers. As you can see, the market was down in the red. Gold was up slightly, but this tells you the companies that got hit, the top losers, top gainers, large cap. It gives you a pretty nice idea of what had happened. Balance sheet rating, sell, buy, sell, whatever. So if you go onto large cap, it basically will tell you the big companies how they did. Visa, Berkshire, Walmart, J&J, all that good stuff. So like I said, this is something if you guys are into, you can spend some time looking into it and getting a better understanding of where things are at. Now from CNN Business, stock market bloodbath, Dow and NASDAQ plummet in the worst day since June 30th. Okay guys, so we got another source that basically confirms that it was the worst day since June 30th. Therefore, more likely than not, that's pretty accurate. In a wild day on Wall Street, the NASDAQ composite tumbled nearly 5% and the Dow fell more than 800 points as investors made a dash for the exits following a streak of record-setting days over the past several weeks. Stocks erased all their gains after a huge bout of exuberance Wednesday when the NASDAQ hit another high. Like I said, guys, this is why timing the market is so difficult to do. We hit all-time highs on Wednesday, and then we had a huge drop on Thursday. I mean, what's the chances you could have predicted that, right? And we had a big drop on Friday as well, and who knows how much longer this drop might go. Maybe Friday was the last day of the drop and we're going to be on an increase. That's why, like I said, because you can't time the market, it's very, very high risk to go all in on one day. That's kind of why I do a more dollar cost average approach, to where I just do it sparingly, and on days where I think it's down or I see something I like, I might go a little bit more aggressive, but never all in. That's not how I do it. Again, not investing advice. Talk to an expert. I'm just giving you my perspective and what I like to do. But you got to do your own research. See what fits for you. Making matters worse, Senate Majority Leader Mitch McConnell said late Wednesday that the cooperative spirit which we had in March and April on Capitol Hill has dissipated as we move closer and closer to the election. This does not bode well for Congress agreeing on another stimulus bill, while the market has been hoping for. Yeah, guys, it's gonna be a rocky ride, because one thing we gotta look at too is Democrats, Republicans, they still cannot figure out a stimulus bill. And let's just look at things objectively here. Does it make more sense? Let me ask you guys this, right? Because I want you guys to be involved here. Does it make sense for the Democrats to agree with the Republicans to push a bill, or does it make more sense for the Democrats to say, hey, we want a bill for, let's say, $2 billion, and we're not going to nudge, and you guys have to come and negotiate with us? The Democrats have more leverage because they're going to do whatever they want to do to make it look like, hey, they tried to pass something and Trump and the Republicans didn't want to. It's a pretty smart move, guys. They have a lot of leverage, and the more they can do to make Trump look bad before the elections, the more likely Biden's going to be elected, and that's what the Democrats want. So, like I said, they have basically been a stalemate for the next package. I've been reading articles and headlines, and basically we're at the same spot we've been. The same issues persist, which is why the likelihood of another stimulus bill, like I said, it's not going to happen anytime soon. Maybe end of the month, maybe beginning of October, but I'm not very hopeful for that happening. That's just a prediction. Why the stock market tanked today? All right, S&P was down, the NASDAQ was down, the Dow Jones was down. Is there a reason? All right, here we go. Let's see what the reasons are. Others note that September is traditionally a poor month for the stock market. It's true that when you look at returns from past years, the average monthly return for September is weaker than any other month of the year, yet that doesn't explain why the drop came today and why it came after an extremely strong showing for stocks in the first 2 trading days of the month. Okay, so it looks like we still gonna have to wait and see what happens. Also, too, data came out showing that 881,000 people filed first-time jobless claims as well. What else we got here? Let's see. So Zoom was yeah, that was pretty insane. That's true. Zoom communications are down double-digit percentage from their recent highs. They've been on your watch list, and it's a good time to take a closer look. Yeah, Zoom stock has been going crazy. I don't own Zoom. I don't plan on owning Zoom. It doesn't fit my strategy. They don't pay dividends, but I know a lot of people who like Zoom, and they've done very well with Zoom. The value just keep going up. Alrighty, this is from Market Watch as well. Here's why the Dow plunged last week and what's ahead for the stock market. This was published today, so this is fresh off the press. September is notoriously a weak month for investors, and October has been the hallmarks of a rough patch for Wall Street, with the November 3rd presidential election looming. We're in September, guys. So we have less than 2 months. That is insane. So there you go. Time is flying by. 2020 is almost over, and I'm sure a lot of people are waiting for 2020 to end. It's just been a crazy year. It's going to get crazier until election time. Even after election, you know it's still going to be crazy, guys. The craziness isn't going to go anywhere anytime soon, especially with the whole bug situation going on. Who knows? Nobody can see what's going to happen in the future. S&P 500 returns following 5-month winning streak since 1950. It kind of breaks it down for you. Next 1-month return, next 3-month, next 6-month, next 12-month average percent return. So it looks like it will gradually go up. Max losses, max gain, percent positive. All right, let's continue on here, see what else we got that we can report for you guys. A bounce to Friday's low, aided by moves into financials, was also viewed as constructive for the broader market heading into the 3-day Labor Day weekend. I like Labor Day because I'm off from work, but I don't like Labor Day because the markets are closed. So that's not going to help me out too much. All right, let's see what else we got. S&P 500 enjoyed its strongest August in 34 years, gaining 7% and added a further 2.3% in the first 2 days of September. The bears' perspective. All right, so you got your bears and your bulls. Let's see What is the perspective? September is notoriously a weak month for investors, and even if that weakness is somewhat moderated in an election year, October is also the hallmarks of a rough patch for Wall Street, with November 3rd elections looming. The road ahead. The road ahead is going to be rough. I mean, we already know this. Investors turn next to the Federal Reserve September 15th to 16th policy meeting, which could be important in clarifying the length of time interest rates could be held lower, but also, what if any new quantitative easing the central banks will implement? Yeah, we're going to have to wait and see how the economy goes. The Fed's basically propping up the market right now. We're lucky that, well, actually we're not lucky because prices are super high, so it's not a good time to really be buying into stuff. But that's what's keeping the markets going. The Fed's been spending a lot of money, and they want to keep this thing going as long as they can, especially in an election year. From Barron's, tech stock are falling because of earnings worries at cloud service companies. Cloud service companies took a big hit because they're part of the tech sector. Let's see what we got here real quick. All right, it just goes over a few companies. Zoom rallied 40% on Tuesday, has been backtracking about 17% over the past 2 days. But remember, the stock had peaked and rallied more than 500% for the year, which, like I said, is crazy. And a stock like Zoom is very interesting to me because you got all these free platforms where people can talk to each other online for free. How does Zoom come out of nowhere and just crush the market? Things we'll never know. Now we go to CNBC, September in the stock market. Three experts on what to expect. In the economic indicators, obviously off a low base because the strongest 3 months we've seen since at least 1999. There's a lot of value in the market today, and even the S&P is up, say 50% over the past 4 days. It's largely been concentrated in tech companies, and the PE spread has gotten enormous between the highest priced stocks and the lowest price, reminiscent of where things were in 1999. CNN Business as well. Like I said, there's a lot of sites that show the market movers. I like to look at it a couple times a week just to see if anything that I own or something that I want to own is here. This is one way you can do it. And Domino's Pizza. Anybody eat Domino's Pizza? I used to eat Domino's Pizza a lot when I was a kid, but as I got older, you gotta take care of what you're eating. And Domino's, it's pretty good. I like Domino's once in a while, but I haven't had it in a while. They dropped 15%, which is pretty crazy. I mean, my bad. They dropped 4%, 15 points. My bad. Correction there. And your top gainers here, that's what we got. Any of these that I own? Carnival, yep, own them. Simon Property, own them too. Bank of America is one company that I don't own that I would like to get into. I gotta do more research into them before I start to invest. But yeah, this is helpful when you want to decide what to do. And here's a really quick recap on why I like Domino's. Domino's is a pizza company. But look at the stock. Does this look like a good stock to you? To me, it does. Over time, it's been going up pretty steadily. As you can see here, right now it's at 389. 52-week high was at 424. Market cap is about 15 billion, so it's not huge, but it's pretty big. 15 billion is a lot, but their yield is less than 1%. So that's the one thing that has been kind of holding me back from getting invested in them. If it drops like crazy, though, I'll probably keep an eye on them. But like I said, I don't have a position at the moment, and I'm not looking to invest at this time currently. Now, last thing I have is this. Economy added 1.4 million jobs in August, and the unemployment rate fell below 10%. This is from the Washington Post. So if there was one source that would want to paint the picture, I don't want to subscribe. I can't exit. Okay, fine. If there is one press company that would want to show Trump in a very negative light, one of them is the Washington Post. And this is interesting though. The economy added 1.4 million. Now, how is that going to reflect when the markets open up on Monday? We're going to have to wait and see. But summer is coming to an end. As you can see, we dropped pretty crazy here in terms of unemployment and the payrolls and all that good stuff. The report is likely factored into the presidential race as well as the political debate about whether to reauthorize more stimulus funding for businesses and unemployed when Congress returns from its These guys are still on recess. We're in the new month. Why are they still on recess? I don't understand this, guys. All right, before I go on a tangent and lose my mind, we'll stop there. But these people are on recess, they chilling. And the U.S. unemployment rate has dropped down to 8.4% in August, down 1.8 points from July. It looks like we're moving in the right direction. But also, too, things related to the bug, I'm noticing we're hitting record highs in numbers in certain areas. So that's going to probably play a role as well, and parts of the economy are opening back up. Like I said, we have a lot of moving pieces right now. You got to keep your eyes open to see what's going on. But as the economy opens in certain states and certain sectors, are we going to have a rise? Are people going to sell out? Are people thinking we might have another shutdown? Because to be honest with you guys, I'm not an expert, but we cannot afford another shutdown. We just can't. The economy got destroyed. People lost their lives. Meaning, some people literally lost their lives, but some people lost their livelihoods because they lost their jobs. And you can't shut down the whole economy. It's not going to work. You got to let people decide, give some guidelines, but ultimately, anytime we leave the house, there's a risk. We just got to adjust and limit our risk as much as possible. Same thing with investing. You got to limit your risk. You got to do your research and know what you're getting into. And you got a lot of tools and indicators to help you better understand, and charts, read charts, to decide what makes sense for you. Alright guys, this video is getting way too long. I'm going to stop it right here. For those who stuck around, thank you for watching. That's going to be us in this video. As always, if you're not subscribed, don't subscribe. And if you like the video, don't forget to like. Until next time, peace.